Hi guys, so we are now into the economics for finance, the revision, which is going to happen for close to 3 hours. So this is a very good opportunity that if you can continuously glance through what I am taking you, it is going to be easy for this particular November examination. Economics for finance is very simple and easy. I'll take you through one after another, and it is going to make your job really simple. Now, what are the ingredients for this 3 hours of economics class? A positive mindset that I will pass this examination in this November 2022 examinations. That chemistry, I wanted you to understand whatever I am trying to say and take down what is being conveyed in this particular class. Ice breaking, yes, we are already doing it. So for any subject, you need ice break with the study material to make yourself really strong. Concepts, there are definitions and meanings where that 50 topics I am going to cover in this 3 hours, and it is going to make your job really simple and easy. Connections, whenever I am talking about policies, I'll talk about fiscal policy, monetary policy and trade policy. FP, MP, TP. Fiscal policy, monetary policy and trade policy. Mnemonics, that means the shortcuts, which is your abbreviation. There are some 85 questions. Last minute revision, you can use that only for 20 minutes to glance the whole of economics. I think it is going to be easily done. Diagrams, which is called in Tamil Padam Parthu Kadai Sol. That means when you see a picture, you will be able to understand it very easily. Like that, you can frame diagrams and see whenever you wanted to study a theory subject like economics. Smart works, yes, we have already told 50 topics as a smart work. For the whole book in economics for finance, 50 topics I will take you through, which I told you. Concepts and definitions also will get covered there. Economics for finance is easy. Numbers game. For example, when I say objectives of fiscal policy is 4, objectives of monetary policy is 4, instruments of fiscal policy is 4, instruments of monetary policy is 6. Like that, when I tell you numbers, your visualization power will improve and increase, and you can easily tackle your question, because you know for that question how many points are going to be there. Reverse psychology. When you always study a question, you tell the answer very easily. Try to do it reverse. When you tell the answer, you can try to remember the question, and indirectly it can be your mnemonics or numbers game, and it can be easily understandable. WDW, I will take you through who define what list. That means there will be some concepts which will be defined by people. So it is going to be important. Next is visualization. We say law of attraction. Just understand that economics is so very easy that getting 40 marks is going to be like this. If you can remember that this is not overconfidence, this is the confidence that you will get because you are studying everything, and then you will study it for your next level also. This is the ingredients for your class. Now this I am taking up for your understanding. So what are the things that is going to be important? Now listen carefully, guys. Whenever I am going to talk about the point on the questions, what I will do is I will put my video off, so you can concentrate only on the topic. You don't need to see me, what is going to be there. When there are questions relating to explanations of it, I'll put my video off, and it is going to be easy for you to revise. Why I do this? You obviously know that your concentration should only be on what? Should concentration only be on the concept. Okay, so one after another we will try to do it, and we can ensure that it is done. Okay, now what is this? Is MAD list, meanings, advantages and disadvantages. Then mnemonics is going to be there. Then WW, who define what, otherwise known as list, what the particular concept otherwise known as. If there is any charts and diagrams, yes, it is going to be case-based questions, which is your formula list. That also I will show you. It can be easy for your understanding. Headings, question and answer for those headings. That means I was talking about the numbers game. How many headings are there? What are the point you will have to understand for that? All these things we can try to make it strong. Objectives or characteristics. I already told you fiscal policy, monetary policy, trade policy, what type of question will come, what is going to be the coverage, all these things. Okay. Next is long answers. Sometimes, though it is going to be only for 3 marks and 4 marks, long answers is easy for you to get the grip of that particular subject. For example, let's take for an example, I will write here regional trade agreements. So when I say regional trade agreements, there will be various trade agreements that's there, but any one question is going to be sure in that, and that's why you need to know your questions. So this is for your objectives and characteristics also, and this is going to be for your regional trade agreements is for your long answers also. I can say regional trade agreement, I can say WTO questions, like that. There are various questions that's there. I can bring for both objectives and characteristics, it can be done. I can also say objectives and characteristics for monetary policy, fiscal policy, etc. So you can easily know what we are going to talk about. Next, differentiate between. Yes, we have already got some 28 to 30 differentiate between, that's there. So it should be easy for our understanding to be done. Comparison list. Whenever I talk about one concept, I will differentiate that with another. Market failure versus government intervention. Why market failure is happening? Market failure will lead to, obviously, government will intervene and make that negative a positive. So that is going to be a crucial factor. Types, stages, and categories type of questions they can ask you. These type of questions they can ask you exclusively in the examination. Any one question is sure. Now this is exclusively only for November 2022 examinations. This is not for all the attempts. This is only for certain important attempts that's there. So this is exclusively only for November 22 and not for any other attempts, because the whole thing will keep on be changing one after another. Okay. Type, stages, categories, and questions. So this is going to be there, important for your understanding. Okay. So now, when you try to study a subject like economics, what you will have to do is you will have to know the coverage of chapters. How many chapters are there? What is going to be a crucial point? What is bigger? What is smaller? What is A, B, and C category? Which is bigger and which is going to be asked more? Which is okay type of a chapter? Which is very easy chapter where they will never ask that in the exam question, but that's only for conceptual understanding. If you know this difference only, I think you will be able to concentrate it really well. Now you should know the blueprint of it. Now what is the blueprint? The blueprint is very simple. You have some 5 questions. Don't bother about 7, 8, 9, 10, 11. Just remember that there are 5 questions. Anyways, like this only it will be asked, but still I am saving there will be 5 questions, and they will say for each 4 questions there will be 10 marks. That means what? Per question it will only be 2 marks and 3 marks. 4 question 10 marks means 2 marks, 3 marks question only will be asked. Whenever there is a question where only 3 questions are there, but 10 marks is going to be asked. 1 5 mark, 1 3 mark, 1 2 mark. And after that, 4 questions 10 marks, 4 questions 10 marks. Indirectly, there will be some 20 questions that they will ask you for 40 marks. So average per question, it will only be 2 marks or 3 marks. So how much ever you are going to write, they are going to give only 2 marks or 3 marks. So will you write more? You will write only to the point that is required for the examination. Let's take for an example. When they ask you WTO itself, when they ask you limitations, there will be enormous amount of limitations for WTO. And let's take for an example, limitations of foreign direct investment. There will be some 15 points. Will you write, sit and write all the 15 points for writing 2 marks or 3 marks? No. You will write only 6 or 7 points, maximum possible extent, because they are going to anyways award only 2 marks or 3 marks. So you will write what is required so that you can save your time. Don't forget, you should have, you will have financial management also to cover, and you will have only a less amount of time. I would say maximum you can take some 45 minutes to cover this economics for finance examination, so that you will never have a problem in writing your financial management, because that will eat your time. Economics for finance should be more like a time pass between your EASSM and in your financial management. That means it should only be a time filler or a mark filler for you to get your points. So that should be easy for us to understand. That's what the whole purpose I am telling you for. Now, let's go directly to the concept. So I'll go directly, put the video off, and then go one after another. What is that they are trying to say is there are 4 chapters in economics of finance and 14 units are there, which will cover your 40 marks. Now, when you wanted to cover this 40 marks, you will think that there are many units. How many units? 14 units are there. And that's what I wanted to cover here. National income and JMK, John Maynard Keynes of national income. That is what we call it as Keynesian theory. In that, you will have 2 units. Fiscal functions and fiscal policy, that is government related. Totally 4 units are there. Okay, this is one chapter, but in that chapter, you will have 4 units. Then money, demand and supply, monetary functions, policies, all these will be covered under the monetary authority, who is RBI, and there will be 3 units. Trade policy, trade functions, international trade, which is your WTO, World Trade Organization, 5 units are there. Here itself, you will cover FDI, FPA, foreign direct investment, foreign portfolio investment, all these things will cover. Okay, so first I wanted you to note this down for a minute or so. I'll give you time. If you glance this and if you write it, then I'll go to the next level. Okay, so start writing this. Hardly I'll give you a minute, that's all, and then I'll go to the next level. So in simple words, I wanted you to write this. Though it is there available in the index, I wanted you to write it down. The purpose why I am saying to write down is because you can be smarter when you take a screenshot or you can note it down or take a picture of that. That will never help you in the examination. What you are going to write only will help you. You can be smarter, but that's not for chapters when you are studying with a conceptual understanding. That will never help you. So write this. I'll give you a minute. So if you are done with this, then we can go to the next one. What is this they are talking about? They are talking about what and all is going to be there in national income. In national income, there will be 11 concepts, 4 measurements, advantages and disadvantages of national income. This will be there in first unit. Then there will be 3 models, 2 sector, 3 sector and 4 sector models. And there will be one multiplier called investment multiplier. This is chapter number 1, which will cover 2 units. I have told very clearly 1 unit of chapter 1, second unit of chapter 1. Then the third unit is going to be 3 fiscal functions and 4 market failures with 8 government interventions. Now you can ask me, sir, where we will have to go and see all these things. You are saying 11 concepts are there, 4 measurements are there, advantages are there, disadvantages are there, 3 models. Where I will have to go and study this? Because institute material looks bigger. Yes, it's important. Yes, it is given by ICAI, but for a quick revision, where I will go? That's what I told you. I will cover my 50 topics there, so you can easily take it from there. Fiscal policy, fiscal functions will be covered. Next, demand. Money demand and money supply. It is not just the theory of demand and theory of supply, because that and all you have already covered in CA foundation. This is money demand. What are the theories? How many theories are there? 6 theories are there. Supply. All the questions that you have is only 2 pointers. So everything will be 2 points only. Easily they can give you, ask you for 2 marks and you can write for 2 marks, including your aggregates. Like what are the 2 aggregates? Monetary aggregate, liquidity aggregate. So like that, all 2 points only will be there. Then monetary policy, how many instruments are there? 6 instruments are there. I already told you when I told you the numbers game, if you remember. What is monetary policy framework? what is monetary policy committee, all these things will be there in one unit. Okay. Next is the chapter number 4, where it has 5 units. See, if you see, there will be colors that I have differentiated, so it should be easy for us to understand. How many theories are there? 5 international theories. How many negotiations are there? 5. Exchange rates, so many questions will be there. Trade policy, how many heads are there? 2 big heads are there. What are they? Imports and exports. In imports, how many big heads are there? 2 big heads are there. In exports, how many points are there? 4 points are there. See the numbers game that I'm talking about. How many types of foreign capital are there? 5 heads of foreign capital are there. In that, we will study about foreign direct investment, foreign portfolio investment, overseas direct investment, etc. So all this and all we will study. FDI, FPI, ODI, I have already. Yes, this is going to be the blueprint and the coverage for the whole of economics. So I will quickly show you for 2 minutes. You can glance this fully and then we can start with the next level. Okay, the whole thing is available for you. So you can quickly take down this and then we'll go to the next level. Okay, start writing. You are going to listen to this for continuously 3 hours. So you should know how you should manage your time. You cannot be on the top of your form for all of the 3 hours. So I am giving you some time for you to write, for you to glance and all in this 3 hours. Okay. You are done with this. Okay. So what is the day 1 coverage? That means how you are going to study for your economics, how to make it very simple and how to make it like a smart work. Which paper is economics 8B? How many marks? 40 marks. How many chapters? 4. How many units? 14. Mark allocation, I have already told. What is income? What will you do with income? Will the individual income be taxed? Yes. What is income? Anything that you derive from doing a business. What will you do? Either you will consume or you will save. Next, will individual income be taxed? Yes. If yes, where? All the 5 heads of income which you studied in direct tax. Do we have the income for the whole nation? Yes. National income, which is your macro level, and so only it is called big. How many types of economics? Micro, macro. What you will do with the personal income? You will deduct TDS and take only the net income, which is called disposable income. So what is disposable income? Personal income minus personal income tax. After your TDS, after your taxes deductions, whatever you get is going to be your disposable income. So in economics, what you are going to learn from national income till disposable income, individual income. What is national income? Economic value of goods and services in the territory. What will not get covered? Non-resident income derived from foreign country, they will not. That alone they will not cover. That means from here, if you go and earn in foreign, it will be a net of. Exclusively, they will say non-resident income derived from foreign country will not be covered. If there is a non-resident, but in India, if they come here and earn, it is okay. But an Indian citizen becoming a non-resident, that will be covered. A non-resident income derived from a foreign country. He is the foreigner, he is only there, he is not coming here. Then why will we cover in India? It will not cover. However, NI includes NFIA, net factor income from abroad. What is NFIA? Resident earning from foreign country and foreigner earning in India. This will be net of amount and that is going to be allowed. However, it includes all that. Okay, next. How many ingredients are there in national income? 4 ingredients are there. What are the 4 ingredients? That means what are the 4 basic factors? Depreciation, NFIA, indirect tax, and direct tax. So there are 4 that is there. How many ingredients? 4 ingredients are there. Depreciation, NFIA, indirect tax and direct tax. So it will get covered with all the 4 important words. What and all words that will be there? That 4 important words are GDP, GNP, NDP, NNP. So I hope you are able to see that white. Gross domestic product, gross national product, net domestic product, net national product. These are the 4 things that you will have when it comes to your ingredients. So there are going to be 4 important words: GDP, GNP, NDP, NNP. So how you will try to calculate this difference? Easily they will say depreciation is there is a change in the first alphabet. When the gross becomes net, then depreciation is the difference. See what I have told you, GDP minus NDP is equal to depreciation. See what I have colored now. So GDP minus NDP is equal to depreciation. Net factor income from abroad, second alphabet changing. Domestic is changed to national. That is the difference, which is your NFIA. Gross domestic product plus NFIA. That means domestic, when you add your net factor income from abroad, it is no more a domestic income. It is a national income. So in simple words, NFIA is equal to difference between income from abroad minus income to abroad. That means from here you are going and earning there. From there, foreigner is coming and giving it in India. That is called NFIA. So NFIA is equal to national minus domestic. So indirectly, national is equal to domestic plus NFIA. What is the third ingredient? Indirect taxes. Market price is bigger and the factor cost is smaller. So to get market price, you will add factor cost plus net indirect taxes. Why net indirect tax is coming? Net indirect tax means indirect tax minus subsidies. See what I am coloring here. So when I am coloring this in green, you will understand it better. So indirect taxes minus subsidies is equal to net indirect taxes. So this is the third ingredient. Fourth ingredient, we have already told, personal income minus disposable income is equal to what? Direct taxes, or indirectly, personal income minus personal income tax is equal to your disposable income. This is the difference that we will try to say for the 4 ingredients in national income accounting. So this is going to be very, very crucial for us to understand. So what are the alphabets that is used to symbolize national income? You use a word called capital Y, national income or income or earnings. Now, what and all we told? We have told all these things relating to national income. We will cover 11 concepts, 4 measurements, and you will go till per capita income. That's what they are showing here. Per capita income means per person, capital income from per person from the population. So this is going to be your 11 concepts that's going to be there. So we are done with what are going to be the concepts, 11 concepts of national income. Measurements, how many measurements are there? 4 measurements are there. How to remember that? They call it a C pi. What is C pi? C, circular flow of income. That means production, income, expenditure, everything together. So in simple words, when I'm trying to write this, I will say P plus I plus E. Production, income, expenditure, everything you will try to connect it together. And that will be like a flow of income regularly coming like a life cycle. So production plus income plus expenditure. Production method is otherwise called product method, otherwise called value added method. Then you will have income method, they will have expenditure method. What does that mean? That means any national income you are going to measure, there is not one way of covering it. One you will cover it through using a product. One you will cover using what is the income that you derive. One is the expenditure. That means what are the consumption that you are going to have. With that, they are going to measure something. Next, basics of Keynesian theory of determination of national. How many models I told you? 3 models are there. What are the three models? 2-sector model, 3-sector model, and 4-sector model. So it is a easy way to tell that it can be covered in any way or the other by using your consumption, savings, and other things. 2-sector, 3-sector, and 4-sector. What is that they are saying as an example? Income is 300 rupees. If you consume 100 rupees, savings or investment is equal to 200 rupees. That means what? You cannot, if you consume all the 300, no savings. If you consume only 100, then remaining you are going to save or investment. That is called 200 rupees. So totally income is relating to C plus I, which is your 2-sector model. What is 3-sector model? Consumption plus investment plus grants from the government. Anything that is from the government. What is 4-sector model? C plus I plus G plus X minus M. Consumption plus investment plus government. Anything that you get from the government plus export minus imports. X minus M. So what is C? Consumption. What is I? Investment. What is G? Government. What is X minus M? Exports minus imports. Now that's a easy way for us to remember. Now all this, why are we taking it for the full-fledged revision is, this has to be done on an overall basis. How you are going to approach economics, that's the whole perspective we are covering now. Approach towards economics, when you cover this 2.5 hours video, I think it is going to make your job very, very, very simple. What is C, I, G, and X minus M? How many policies are there? 3. Fiscal policy, monetary policy, trade policy. How many functions are there? Fiscal function, monetary function, and trade function. Who is the authority for fiscal policy and fiscal function? Government. Who is the authority for monetary policy and monetary function? RBI. Trade policy, trade function, WTO. So this is the easy way for us to understand. What are the 4 chapters we have already told? How many multipliers are there? 3 multipliers are there. Investment multiplier, money multiplier, credit multiplier. Investment multiplier will be there in Keynesian theory of determination of national income. Money multiplier will be there in monetary policy, which is going to be connected with your supply functions. So I will say supply functions. And then this also is going to be supply functions. Credit multiplier. So this is going to be relating to chapter number 1. How many fiscal functions are there? That means what? Whenever you are going to run in an economy, 3 functions which are going to be important that the government will concentrate on. What is that 3? We call it as ARS. Who brought this concept? It is brought by a person called Richard Musgrave. What is A? Resource allocation function. That means A is allocation of resources. A is allocation. What is R? Redistribution function of income and wealth. What is S? It is called stabilization. What stabilization? Macroeconomic stabilization, price stability. So stability means what stability? Price stability. So you will concentrate on ARS, and that is your fiscal function. Now, you should remember that fiscal functions, ARS is a separate unit, and if the fiscal functions are not proper, then it will lead to something called market failure. See the next one. See the 25th one. If fiscal functions, ARS is a failure, it is called market failure. How many market failures can come? 4 will be coming. What are the 4? Market power, externalities, public goods, and incomplete information. Market power means they will concentrate on what? Monopoly. Monopoly means single seller. Externality, external benefit, external cost, not private. Anything over and above from your internal, they call it as external. That means economics you are not studying, there is an external benefit from a faculty comes. So this is externality. You are not spending anything, but because of somebody else, you are incurring a cost. That is called external cost, not a private cost. It is over and above that. Public goods. What is the biggest problem in public goods? Free rider problem. That means anybody can use the public property. making use of another person's goods. For example, if this is my mobile, I'll take this mobile and this mobile is mine. If you have a common mobile in Institute of Chartered Accountants of India, do you think that mobile will be there for second day? First day itself, people will use it and throw. That means what? Why I am telling you this as an example? Free rider problem. If you know it is your property, you can keep it safe. If you know it's only a public property, you can start using whoever you want, and then you will never be having it in a condition. Incomplete information. That means what? Either the buyer knows more than the seller, or the seller knows more than the buyer. But at the end of the day, nobody knows it fully. I will tell you all the examples when we cover. MEPI is going to be the market failures that is going to be there. Who will rectify the fiscal failure? Government will do. So for that, how many points you should remember? You should remember that there are 8 government interventions, which we call it as MEPA, ED of IW plus MG plus DMG plus DNP. You will not understand anything now. When we go to the 50 topics, you will understand. So I will say here, refer 50 topics. What is MEPA? Four types of market failure. What is MG? Merit goods. That means positive goods is called merit goods. Demerit goods, negative goods are socially undesirable goods is called demerit goods. Equitable distribution of income and wealth. That means what? Rich will not become richer and poor will not become poorer. So that's a easy way for you to understand. I will expand on this. I hope you are able to see this. Rich will not become richer, poor will not become poorer. Why am I saying this? For a simple reason. You are having an equitable distribution of income and wealth. Non-market pricing, that means they will concentrate on any other price interventions, or the non-market pricing is one way of pricing from the government. We call it as, maybe we can bring something called minimum support price for farmers. So minimum support price, like that you will try to bring, and this is what they will call it as the market failure. So fiscal functions is going to be relating to 3. And what is ARS? How many ARS is there? How many? So in simple words, they are the fiscal functions and market failures and this. So ARS in bracket, I will say 3. MEPA in bracket, I will say 4. Government interventions in bracket, I will say 8. So this is going to be easy for us to cover. Fiscal policy is, you will concentrate on bringing all this and say, what are the questions that you will get covered? Objectives of fiscal policy, 4 points. All these are the next unit. I already told you what and all is there in the first 4 units. You remember? I am talking about all these things in an easy way. How many instruments are there? 4 points. How many dimensions are there? 2. What are the dimensions? Discretionary and non-discretionary. So I can bring this easily and say discretionary fiscal policy and non-discretionary fiscal policy. What are the 2 types of fiscal policy? Easy to remember. What is easy? Expansionary and contractionary. So that's a easy way, easy to remember. So mnemonics. Yes. crowding out, pump priming, compensatory spending, or short notes question. So I will mark it very important for your examinations. So that's important for your exam questions. Crowding out, pump priming, compensatory spending. It is going to be important for you. What is the this and all? Now what we have told? We have told the ARS, MEPA, government intervention, and the fiscal policy to be remembered. Now, apart from that, what is there for demand for money? Demand for money means want of money. You will bring how many theories are there? There are 6 theories that is there for your demand for money. It is called CSK IFP. What is C? Classical approach. Yes, secondary classical or neoclassical approach. Now, when we say classical approach, we will say it is going to be the first approach. Secondary classical or neoclassical is the second. All these are before Keynes. Then Keynesian theory will come. What are the 3 motives? We will talk about TPS. What is TPS? Transactionary, precautionary, and speculative. After Keynes, they will bring 3 approaches. We call it as IFB. So only we call it as CSK IFB. What is I? Inventory approach, Friedman restatement theory, and behavior of money towards risk. Please take down this. So I wanted you to write the CSK IFB now. Start writing. I'll give you 1 minute and then we'll start with the next one. Have you written, guys? Okay, so if you are done with this, then we can go to the next one. Then we say, for all this, we need to cover who defined what. Who defined what is going to be WDW list, and you will have to know this and all. If you study, it becomes easy for our quick revision. They may ask you this in 2 marks also. There is no MCQ for economics, so but we can still make it easier. What is international trade? Trading, buying and selling between nations. How many theories are there? 5. Now, where are we coming? We are coming to the 4th chapter. So, units are all done. 4th chapter we are in. How many theories? 5 theories are there. What are the 5 theories? We call it as MACHN, M-A-C-H-N, mercantilism. Who brought this mercantilism? Europe great powers brought this mercantilism. Absolute advantage theory. Who brought this? Adam Smith. Then comparative advantage theory. David Ricardo. And then who brought the Heckscher-Ohlin? 3 people are there. Heckscher-Ohlin Samuelson theorem. That is called HOS theorem. New trade theory. It is brought by, they have not told the name. It is brought by some various economists by during 1970s. That's what they wanted to bring. So I would say it is developed in 1970s. That's what they would have given. So mercantilism, absolute advantage. So this is MACHN, MACHN. So you can remember all this propounded by, this will be covered by WDW. Who defined what list? How many instruments? We already told: fiscal policy, monetary policy, trade policy. What are the instruments of fiscal policy? 4 are there: government expenditure, public debt, budgets, and taxes. When I say when I say government expenditure, they will say current expenditure plus capital expenditure plus transfer payments. Public debt. So how much is the debt? That's what they will say. You will have to cover two ways of covering things: public borrowings and debt. Remember. So I'll write public borrowings. What and all you have borrowed from public plus how you are going to repay your debt. Budgets. You can either say it's a surplus budget, or you can say it's a balanced budget, or you can say it's a deficit budget. Personal income taxes already covered. So I will say national income accounting. So this is going to be even more easier for us to understand. So I'll again repeat: government expenditure, public debts, budgets, and taxes. So I am going chapter by chapter, unit by unit. Anyways, you can compare that with your study material also if you want. If you are not able to understand in what flow I am going, you can cover. If you have already covered your study material, it will be very easy for us to know in what way I am covering this. Now, I told you there are 4 policies in fiscal policy, 4 instruments. Then how many instruments are there in monetary policy? There are going to be 6 instruments, and that's what we are going to cover now. What are the 6 instruments? CRR, SLR, LAF, MSF, MSS, OMO. So who are the 3 people involved in this? SCB will be involved, Scheduled Commercial Bank. GOI will be involved, Government of India. Market will be involved, demand and supply. CRR, SLR, LAF, MSF is between RBI and SCB, Scheduled Commercial Bank. So first 4, liaison will be between banks alone. Will be between banks alone. So when I'm talking about banks alone, I'll talk only about RBI and SCB. MSS is between RBI and Government of India. What is GOI? Government of India. OMO is between market, RBI and market, demand and supply. Now I told you monetary policy is 6 instruments, fiscal policy is 4 instruments, and how many instruments are there for trade policy? It is going to be 2 instruments. What are they? Import and export. In import, you will have tariff. You have two heads, tariff and non-tariff. In non-tariff, you will have 2 measures, technical and non-technical. See what I'm writing here. I'm writing here 2 measures, so that the next line you will understand easily. Export measures, you will say 4 export related measures, easy to remember as BEER. Ban on export, export taxes, export subsidies and restraints. All this for favorable for domestic country and to restrain your exports. And to restrain exports to other countries. So that's what you will try to remember. That means what? First, domestic trade has to be done. So this is going to be a crucial factor for your understanding. So we have told about the imports. In imports, we told tariff, non-tariff. In non-tariff, technical, non-technical. All this will be there in your 50 topics or in the question and answers list that is going to be there. So technical and non-technical. How many export related? 4 export related measures are there. You can remember that as a BEER. Okay. So till this, we have completed the base of knowing what and all is going to be there in your trade policy as instruments. Okay, glance this now. Then we will start with the next level. So done with your restraints on voluntary exports. How many trade negotiations are there? There are 5 negotiations. I already told you an example of regional trade agreement. So trade negotiations are actually 5 in number. You can remember it as RGUWD. What is this? All these are mnemonics that I asked you to remember, are regional trade agreements. That means all these agreements were between the member nations, between the countries nearby. So all these things, there will be some number. We can try to take it in 50 topics. GATT, General Agreements on Tariffs and Trade. That is your treaty between the member countries. They framed something like a treaty, and between the member countries, they had a deal that is to be done. That's a treaty, so that all the countries will abide for it. Uruguay round, 8th round of multilateral trade negotiation. That means that's the round. See, there will be various member countries who will get formed in one particular place, take decisions whether one point is going to be okay or not okay between the member countries. So in that, they understood GATT is of no use, because beyond GATT, the other countries have already started developing. So they say GATT will be stopped and we will bring something called WTO. What is WTO? World Trade Organization. So they brought this in a round called Uruguay round, which is the 8th round of multilateral trade negotiation. Now you can see this only for concept. So WTO, they brought it as an international body, better than GATT. Post WTO, Doha round, 9th round, again only for concept. That means you will understand it only for conceptual understanding, nothing else. So the last unit is types of foreign capital. What is FDI, FPI, and ODI, overseas direct investment. So till this, what we have done, we have told what and all are the points that is going to be relating to the coverages relating to all the 4 chapters and 14 units we have covered. So then and there, we can try to cover up and make it really strong. Okay. So what is the full coverage? So full coverage, we have already told it in an indirect way, but still we'll take you through on a quick way. 2 types of economics, 3 types of policies, totally 4 chapters, 14 units. All this we have told: national income plus Keynesian theory of determination of national income, ARS plus ME play plus government intervention plus fiscal policy, demand plus supply plus monetary policy, and chapter 5 we have already told 5 units, which is going to be relating to trade policy and trade functions. National income, we told 11 concepts, 4 measurements, advantages, disadvantages, ARS, MEPI, and government intervention. When I say externalities, there are 4 types. You can remember this. 4 types: positive production externality, negative production externality, positive consumption externality, negative consumption externality. Public goods, incomplete information. And we have already told government intervention is 4 plus equitable distribution of income and wealth plus merit goods plus demerit goods plus non-market price. Fiscal policy, I wanted you to remember this, that there are 7 questions only. What are the 7 questions? That's what is going to be written. Objectives, dimensions, instruments, types, how you will reduce the inequality, what are the limitations, what is crowding out. When I say crowding out, we also said, if you remember, pump priming and compensatory spending. So you can remember this. I'll give you some 1 minute. Quickly take down this fiscal policy alone. What are the 7 questions that's there? Till this, the chapter number 2 is done, and we'll go to chapter number 3. This alone I wanted you to take down. Write down this. So if you are done with this, then we can show for what is there. This is for quick understanding. We have already told CSK IFB. We have already told supply will be all two pointers only. What are the two points? I wanted you to write this. Money supply 2 points, measurement 2 points, sources 2 points, determinants 2 points, money multiplier, credit multiplier 2 points, where there is a formula. So you can write this by the time I will write. Money supply divided by monetary base and 1 divided by required reserve ratio. So credit multiplier is going to be 1 by triple R, required reserve ratio. We already studied one, but you don't need to remember too much, but you can still connect it saying multiplier to formula is change in income divided by change in investment. Where did we study this? Keynes theory. Keynesian theory of determination of national income. So you can remember this also. So formula delta y by delta I. Delta y is income, I is investment. Keynesian theory. So you can remember investment multiplier, credit multiplier, money multiplier. So you will cover all this. Okay. If you have taken down this, then monetary policy. You will have objectives, 4 objectives, 4 analytics, 6 instruments, monetary policy framework, monetary policy committee. All this will be covered in the monetary policy instruments. So what is going to be direct instrument? See what I am coloring. I am using a different color. What is direct instrument? What is indirect instrument? CRR and SLR is direct instrument. LAF, MSF, MSS, OMO is indirect instrument. So please take down this. I'll give you 1 minute to write so that when I glance through in the 50 topics, it becomes easier. Okay. Take down this. I'll give you correctly 1 minute time. 1 minute is too much of time. I'll give you 1 minute. Okay. Start writing. Okay. If you are done with this, Then what we will try to do, we will try to go to the next level. Theories we have already told. Mercantilism is European great powers. All this we have already told. I'm not going to discuss all this. We have already told this. Types of foreign capital, that this. This is going to be very important. The big questions that is there overall. So what is this done status is? All this we will try to cover in the material, and we are going to cover this from the institute materials perspective for the ICAI classes and for the other topics which I take it in the private academies. This is the heads of question that is going to be there. So anyways, we will cover that later. National income, I have already told 4 ingredients are going to be there. So that's not going to be a big deal. We can easily remember. Basics of national income. Yes. What is national income? This is going to be one crucial factor on understanding the concept alone. You are not going to cover beyond this. This is only for introduction of national income, why it is important, who will get benefited, what is that they will determine, who is the ministry, what is the office. This is going to be very, very important. Central Statistics Office, this is going to be important. What is that concept called? It's called a flow of concept because it will measure the value of output. All this and all is basics. How many activities? 2 activities. We would have studied this in CA Foundation. In business economics and BCK, what are economic activities? What are non-economic activities? What John Maynard Keynes told, all this we already know, and we have already covered this also. What are the 11 concepts? I have given the 11 concepts here. So you can remember this flow. Anyways, we will cover this in the 50 topics to tell what is the head. We have already told this. What are the ingredients? I have already again told there are 4 ingredients. Depreciation, NFIA, net indirect taxes, and direct taxes. What is the first alphabet, second alphabet? That's what we are showing here. Depreciation, NFIA, indirect taxes, and direct taxes. We have already told what is the difference that's there. Measurement, CPI, we have already told. John Maynard Keynes, this is very crucial. For 2-sector model, they will have something called CAN model. CAN, C-A-N. What is CAN? Circular flow, aggregate demand, and national income determination. In circular flow, they will talk about what? They will talk about the flow of all the functions that is going to be there before. A is aggregate demand. It will cover consumptions. It will cover saving. In that, they will say APC, APS, MPS, average propensity to save, marginal propensity to save. Average propensity to consume, marginal propensity to consume. Marginal means change, average means total. So these are going to be there. What is a national income determination? All these are going to be crucial. 2-sector model is C plus I, consumption plus investment plus CAN model. 3-sector, 4-sector, we have already told again and again. I am not going to. Measurements of national income, you should cover that there are how many measurements there? 4 measurements there. What are the 4 measurements? One is value-added method or product method. Another is income method. Another is expenditure method. So I am going to show you what is there in value-added method. First class, there are 3 steps that's there in value-added method. Classify the sectors, primary, secondary, and tertiary. Primary means relating to raw material. Secondary is manufacturing. Tertiary is the services related. Value of output. That means how much you wanted to derive as output. In the intermediate, in the middle, what are the consumptions they are going to cover it. So you can cover intermediate consumption. So value of output, how you will determine. First, sales. What is the sales? What is going to be the changes that's happening in the opening stock and closing stock? That difference is going to be value of output. This is very crucial for your exam question. The step number 3 is estimation of national income. We have already told when you subtract depreciation, it becomes net value added or net domestic product. Here they will use a word value added because this method is called value added method, not domestic product. And they will obviously say plus NFIA and minus net indirect taxes. What you will get at the end of the day? National income, which is called net national product at factor cost. So this is going to be the crucial factor, and that's why we wanted to bring this. National income. Income method, COMN. This is the easy way to remember. What is COMN? compensation of employees. That means all the factors income they will add plus operating surplus. What and all is there in operating surplus? Rent, wages, interest and profit, RWIP, plus mixed income. It can be capital income, it can be labor income, it can be a combination of both, plus NFI, a net factor income from abroad. C plus O plus M plus N. So this is going to be there for your income method. And expenditure method is, there are expenditure method is otherwise called disposal approach. 3 again points are important. Consumption, how much consumption you are making it, that you will add. What are the expenses that you are do it on the middle of it, that you will add, plus net exports. So again, this is going to be very, very, very crucial. So what we have covered, production or value added method, income method and expenditure method. All this if you cover, this is going to be relating to what? This is going to be relating to your national income measurements, CPI. Are we clear? Okay. Glance through this for 5 minutes. So we are done with the measurements of national income. We have told this. What are the instruments of fiscal policy? I already told you that there are 4 instruments that is going to be there, relating to consumption, investment and transfer payment, and it is going to be relating to the pump priming, compensatory spending and crowding out. Anyways, we will cover this in the 50 topics as a heading. Public debts is public borrowing and debt repayment. And then we have already told about budgets, 3 types of budgets, and your taxes. So taxes, personal income, disposable income. So all these things we will try to remember, and these are the points that we will try to take it for the point to be remembered. Now all these are going for one after another. This is when I take you through the whole notes, and that's what I will try to do it in a regular course or a crash course. But for us to understand it in a quick way, I cannot discuss all this in the 3 hours. I am just taking you through what and all I have got. If you see the tab that is there, everything will be covered and you can come back to us. Always we can help you with all the notes and videos. So that's going to be absolutely fine with us. But the only thing is we cannot do all that because this is only a last minute revision. Foreign direct investment versus foreign portfolio investment. We said whenever there is a physical asset involved, it will be foreign direct investment. Whenever there is going to be a financial asset, it is going to be a foreign portfolio investment. So this is going to be one way on covering what is FDI, FPI. Then long-term interest. Whenever there is going to be a long-term interest, obviously physical asset is not immediately to be sold. It is for a long-term interest and it is for the long-term investment. This is short-term interest and short-term investment. When it is long-term investment, it is relatively difficult to withdraw. Easy to withdraw is opposite. Very simple. Differentiate between is always easy because one is going to be the opposite to another. Not inclined to be speculative. Physical assets will not go up and down. This will be speculative in nature. Up and down will be there in whenever you deal with securities. Not accompanied by technology transfer is FPI, often accompanied by technology because it is for some 10 years or 20 years term. Within 20 years, there will be too much of change in technology. FPI securities hardly, it will be like 3 months, 6 months and all. You can also do a intraday, interday. All the securities will not be having a technology transfer. Direct impact on the employment of labor and wages because so many people will be involved. This will be no direct impact. Enduring interest in management and control. That means they will concentrate more on this from the management's perspective. This is no abiding interest in management control. Securities to be held with a significant degree of influence. That means they will concentrate more on showing how much influence that the physical assets are making. They will never consider this as too much, but it will only be an financial investment. No significant degree will be there. So in the right hand side, I have told long versus short, difficult versus easy, speculative versus non-speculative, technology not much, labor and wages versus no labor and wages, interest and no interest, and degree of influence versus no degree of influence. Easy to remember for us to understand. Now, before we go to the 50 topics, the formula list, what and all is going to be important is what I wanted to go and cover. What they can ask you a net national product at factor cost, they can ask you investment multiplier, they can ask you four sector model, they can ask you any expenditure method. It can be using a private financial consumption, government financial consumption, then gross domestic capital. For gross domestic capital formation, you will have a big formula to remember plus net exports. So they will include all these things which we call it as. So I will say important here. Why important? Because they can ask you very easily this in the examination. And important. So this and all is going to be important. And this is again going to be important. Again going to be important. Operating surplus important. MPS, APS important. Reserve money important. This is important. So all this, I am not taking the numbers, but I'm making you write this. So income method, COMN, again, it can be important. Don't bother about the numbers, but bother about all these things. So all these are important. Directly value added method, 3 points is going to be important. So all this remaining, that does not mean it is not important. You will have to concentrate more on this. And income method, operating surplus. What are the 3 steps in value added method? What is the value of output? What is MPC, marginal propensity to consume? What is the multiplier effect that they will ask you? What is the formula? How many multipliers are there? What are the 3 approaches? What is credit multiplier? What is reserve money? Real exchange rate, how they will calculate? Terms of trade is a new formula that's there. GDP deflator, they have added very recently. So that's going to be important. So please take down this. I will show you. I'll show you very easily for some 2-3 minutes. Please glance this and write it. Then I will scroll down because I've already explained this. So quickly take down this and then we'll go to the next level. I'll give you some 2-3 minutes to write, then I'll scroll down. So if you are done, I will scroll down. So if you are done with this, then we can go for what is GDP deflator. Why I wanted to give this time for you to glances to write GDP deflator. Anyways, real GDP is nominal GDP by GDP deflator, or GDP deflator is nominal GDP minus real GDP. This is the words that we will try to use. Aggregate demand, consumption, marginal propensity to consume, average propensity to consume, what is the saving, marginal propensity to save, marginal propensity to save, what is income, what is change in income, 1 minus 1p MPC is investment multiplier, what is your money and value. So what is going to be your other demand related price, what is multiplier, how you will measure money multiplier. All this we will try to have M1 plus M2 plus M3. That means M1 is more liquid, M4 is the least liquid. They will try to add something. So this will be there in your material. They will ask you this. What is reserve money? They will ask you from this. What is narrow money? What is near broader money? What is broader money? So all these things will be based on your reserve banks instruments, and you will try to take it really strong. M1, M2, M3, M4. What is reserve money? Reserve money is very crucial. Reserve money, I would say, it is important. Reserve money is important. So you can accordingly take this really strong. So important, yes. Definitely it is going to be important. So important, you can try to remember this. Reserve money, what they will give you all the points and they will ask you to add up and say what is going to be there. Then liquidity aggregates, what is L1, what is L2, what is L3, which will be included. See the side headings that I have told, which is going to be included, which is not going to be included. All these things we are going to say. Real exchange, nominal exchange rate. Just now I told you about the GDP deflator. So how you can cover this automatically? What are these points? This is going to be getting covered. Next is the ABC formula. What is this ABC formula? A, small a means what? Constant value in the representing the value of consumption. In simple words, they'll say capital C is equal to A plus BY. What is small a? What is B? B is slope. What is capital C? What is capital S? So this is going to be very vital. I will show this for some 2-3 minutes. Please write this. All this, there is nothing to explain. You can take down this. And L1, L2, L3 and all we have already told. So I wanted you to write only what is this that is given in this light pink color. I'll give you some 2-3 minutes time. Can you glance this? Can you write this? And then we'll go to the 50 topics after that. Okay, start writing. After this, we'll go to the 50 topics and then we can make it really strong for the remaining number of hours that we should cover. If you are done with this, then what we will do, we'll go to the 50 topics and cover the remaining things that is there. Big questions, list questions and all we have already told. Who defined what? So who defined what is going to be again crucial. So I will show this for your better understanding. You can also write down this. I'll give you some 5 minutes time to write down this. And then once you finish, then we'll go to the 50 topics. 5 minutes I'll give you. Please write down this. Okay, 5 minutes. So guys, I hope you should have completed this. Now we'll go to the 50 topics.